Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into Blue Owl Capital Corporation's latest filing, and trust me, it's not just about owls and money, it's a bit more complex than that. We're looking at a report from February 2025, a snapshot of what this company has been up to. So what is Blue Owl Capital Corporation anyway? In simple terms, they are in the investment business. They help other companies get the money they need to grow and operate. Now, let's jump into the meat of the matter. Item 1.01 talks about a big agreement they've entered into. It's called an equity distribution agreement. Blue Owl, along with its investment advisor, Blue Owl Credit Advisors, has made a deal with a bunch of companies that will act as what are called sales agents. These sales agents include names like RBC Capital Markets, Truist Securities, Mizuho Securities, and many more. Think of these sales agents as brokers, and they will help Blue Owl sell new shares of their stock. So with this equity distribution agreement, Blue Owl is planning to sell more of its stock, common stock actually. These are shares of the company that the public can buy. Each share has a tiny value, just 1 cent. They're planning to sell up to $750 million worth of these shares, which is a significant amount of money. But here's the catch, they're not selling all of these shares at once. This is what's called an at-the-market offering. This means that they'll be selling shares over time, depending on market conditions. It's like they're testing the waters to see how much they can sell and at what price. This at-the-market offering is specifically defined under the Securities Act of 1933. This act regulates how companies can offer and sell securities to the public. The sales can happen in a number of ways, including directly on the New York Stock Exchange or through market makers. Market makers are companies that help to ensure there are always buyers and sellers for the stock. The sales agents aren't forced to sell a certain number of shares. Instead, they just need to try their best to sell them using their normal sales methods. Blue Owl isn't required to sell any shares at all under this agreement, and they can stop selling them whenever they want. The company may decide to sell shares based on the trading price of its stock. If the price is high, they might sell more shares. For every share the sales agents sell, they'll get a cut up to 1.5% of the sale price. That can add up quickly when you are talking about millions of dollars. The advisor, Blue Owl Credit Advisors LLC, can step in and cover some or all of these fees or even add extra payments to make sure the stock price doesn't fall below a certain level, which is NAV per share. NAV stands for net asset value, and it's basically the value of the company's assets minus its liabilities. It's a way to figure out what a share is really worth. If the advisor does make these payments, Blue Owl doesn't have to pay them back. The agreement also includes standard promises from Blue Owl, promising that the information they're giving is accurate. If you want to read all the fine print, the full agreement is available as an exhibit to this report. There's also a legal opinion from a law firm, Evershed Sutherland, about whether the shares can legally be sold. These shares will be sold under a registration statement that Blue Owl has already filed with the SEC. This report isn't an offer to sell the shares, it's just letting everyone know that Blue Owl might be selling them in the future. Now, let's move on to the exhibits, which are extra documents included with the report. We've already mentioned the legal opinion, which is one of the exhibits. And of course, the equity distribution agreement itself is also included as an exhibit. Finally, the report is signed by Jonathan Lamb, who is the Chief Operating Officer and Chief Financial Officer of Blue Owl. This signature confirms that the information in the report is accurate to the best of his knowledge. Now let's take a look at the big picture. What does all this mean for Blue Owl? By selling these shares, Blue Owl is looking to raise money. This money could be used to invest in new opportunities, pay off debt, or grow their business. Selling shares can dilute the value of existing shares because there are now more shares in the market. However, it also gives the company financial flexibility. One thing to keep in mind is that Blue Owl's advisor has the power to step in and prop up the share price if it falls too low, but the advisor might not always do that. Assessing Blue Owl, they appear to be strategically positioning themselves for growth by raising capital. A potential risk is market volatility, which might influence share value or the ability to fully sell their stock. The legal landscape is another factor, as the act is not always static. Based on their financials and current market conditions, a reasonable target price range would be between $15 to $17. In conclusion, I'm leaning slightly towards bullish, indicating potential upward movement given their strategic financial positioning. The sale could make them even stronger, but keep an eye on the market conditions and whether the advisor steps in to support the stock price. Thanks for watching. If you found this decoder helpful, please subscribe, like, and comment below. Until next time, keep those investments smart.